Good evening and welcome to tonight's special council meeting. I'd like to call the meeting to order. And the item of business tonight is discussion of city health insurance plan options. So Ethan, I'm sure you have some information for us.
Yeah. So you all saw this during the work session presentation, but to just kind of go over it again and with the expedited need for this meeting, sorry, I don't have it on the fancy presentation, but as you can see, obviously our trend line has mostly gone up as far as the city's annual cost of insurance. Did note that we have brought on more covered lives onto the plan, so that helps explain some of those increases as well. We're just insuring more people or more employees have eligibility to be insured than way back like in 2016. As you can see with our percent increase year to year, we've been pretty volatile. 44% was our high. I'll note this year it says it's negative 6%. The reason that's actually showing as a negative amount is we did have someone come off of our insurance plan, and with the age-based rates, they would have been at a higher rate. So while we know our increase was 4%, but overall the city will spend less because due to the age differential of the employees on the plan. And that's just the way it works. So that's not really a 6% decrease. It's just we are expected to spend less overall, and we're also technically down one employee right now compared to cover, which is also why it's lower. That number would go back up probably at that 4% if we just put a phantom employee in, but we were going off of real data. So, and then you can just see those annual increase costs and how there's really not a lot of correlation between our what we see year to year in our per capita. We still have increases even on years we say we're decreasing. So the next slide gets back into kind of if we stay with our Blue Cross Blue Shield, which is the blue line. And then those are mistitled on that slide. I apologize. The blue line is Blue Cross Blue Shield, and the green line would be the KMIT plan. So one of the big benefits of the KMIT plan, and I probably misspoke a little bit, is this is actually an association, not a pool. So all the members that would join would be a member of the association. It's not like our work comp where, it's actually a pool and, there's a big, all of us are into the money together type stuff. So the association basically is who Blue Cross Blue Shield deals with, and they bother. And Mike Wise is here, our insurance consultant. He can probably explain to you better the differences between an association and a pool when it comes to being insured. But as you can see, the whole goal of the association is to provide stability and predictability to the rates. One of the big things we all complain about is because of our renewal dates with Blue Cross Blue Shield, our plan date starts January 1. We don't get our renewal information until October, and Blue Cross Blue Shield will not give you any meaningful thing when it's time for us to budget. So we utilize Mike's experience and what he's seen from, kind of ongoing plan years. We look at the historical trend and we're like, but we're always almost, really crystal balling what's health insurance going to be. And so I can tell you the year we had the 44% increase, the city budgeted a 15% increase. So when it came in 30% higher than we anticipated, then we scramble to figure out in the budget, how do we, we know we need to pay this money. What are we basically going to cut in order to make sure there's money for health insurance? So that is one of the big goals of switching would be to get that stability, knock that volatility of 1 year we're at 4%, the next year we're at 18%. Over time, historically, we have seen basically about a 13% increase in rates year to year. And we know being on an ACA compliant plan, we will experience at least a 3% increase every year just because everyone gets a year older on those age band rates. So that's That's the nuance. So the last slide is looking at, our current is red, and the KMIT plan that we would recommend, or I would recommend is the green bar. As you can see for 2022, there's increase, both 2022, 2023, 2024, is where we actually see, that difference get significantly smaller. And then from 2025 on, you can see that Blue Cross Blue Shield, if we assume that annual rate of increase we've seen, starts kicking us up way higher than the KMIT plan would. So in the short term, switching to this is giving us a bigger increase than our Blue Cross Blue Shield. However, as we look down the road and thinking long-term, and we know health insurance is one of our largest costs, this would actually hopefully manage that at a more effective level than we currently see with Blue Cross Blue Shield. I didn't make the note showing you there of where we've set that budget line item. And we've kept it there throughout the volatility to allow, and that's because, every year when you basically say, let's get, we got to plan for 10% more, that kept on bumping that up. We finally got to a point where it's like, okay, let's see what our actuals come in and put the money in a better line item. So we're still covered under what we budgeted for with either plan. The next slide shows, or the next sheet's basically the first two, the comprehensive major medical, under the KMIT group. And we would choose option C, which is closest to the current deductible and co-insurance that we offer now. And those costs, but just for any of you that want to look at kind of the summary, the Blue Care Premier SG Choice, that's the plan the city currently has now. KMIT is offering either Blue Edge or comprehensive major medical. Speaking with the employees and the department heads, they preferred the comprehensive major medical, felt that that offered a little bit better benefit to the employees if we were going to switch in terms of the copays that we're seeing, drops the copays on drug from our current plan. Again, the cost is a little bit, or is higher, but essentially it's basically about the exact same plan we have, minus some changes on the co-insurance max, and then copays going down. Like these plans have $250 ER copay, where our current plan has a $300 ER copay. So not a huge amount of difference. Just when we presented both options to department heads and kind of asked, the management team what they thought, they felt more employees would probably be happier under the comprehensive major medical as opposed to the Blue Edge. And at this point, I'll kind of stop and let Mike come in and give his thoughts. And like I said, maybe, Mike, you can kind of walk him through the difference between an association and pool.
Okay, so pool plans typically are, and association plan allows several different employers to band together to get better pricing. Pooled plans typically are fully self-funded plans. I think the goal eventually for the KMIT deal is to get to level funding, which would be a whole lot different than totally self-funded plans. Level funding, are you guys familiar with the difference between level funding and self-funded? Okay, so currently we're in a fully insured plan with Blue Cross Blue Shield. We have no risk to us as a city on claims in excess of. But when you get to level funded plans, what those level funded plans are is they look and they feel like fully insured, but built into them, they built in the risks associated with the employees who are participating in the plan. And then you have fixed cost in there, and then you have stop loss claims, and you have all those other things. And in those plans, you pay a level fund throughout the plan year. And
Could you move over more in front of that microphone?
okay, so what happens is that at the end of the year, you're going to have this claims pool that hopefully you have an excess in. In a level funded plan, then typically what the carrier does is they split that claims pool, whatever's left in there, they keep half of it, you get half of it. In self-funded plans, truly self-funded, it works in a situation where you have fixed costs, which are going to include the administrative costs of the plan, and to have access to the networks, and you're going to have all the payout claim stuff is all done there in the admin costs. So you've got a fixed cost, and that's typically what they bill you each month. Then you have the claims pool is, they'll give you an idea on what they think it's going to be, but on that fully self-funded plan is they will draw on a weekly or a monthly basis out of your checking account, or however you're going to fund it, to pay claims. And in my experience in doing fully insured or self-funded, if you're paying claims on a weekly basis and you get up at 8 o'clock in the morning and you look and say, okay, today it's only $25,000 they're pulling out of the account, you don't feel so bad. But when you look at it and it's $250,000 today we're pulling out of the account, it makes you nervous. So the level funded is typically what's out there. If this gets to level funded, then it'll be interesting to see how they let either new groups come in or out, because they're going to have to do it based off of your, they'll underwrite any new group based off of the employees who are going to participate in the plan. Questions? Typically, association plans run well for all the information that I've received. You're not locked in. If you get in here and it doesn't run the way you think it's going to run, you can get out. So you can kind of, decide the way you want to look at it. Any questions?
Get out, is there anybody out there who's gonna let us in if we get out?
Well, because of the fact that we are a less than 50 employee group, you could go right back to Blue Cross and Blue Shield. The problem is that I've been doing this for about 30 years, and when I started, we had 27 different carriers that would write group health insurance. Today in the state of Kansas, you're probably looking at 3. You're looking predominantly, they're either Aetna, United Healthcare, or they're Blue Cross Blue Shield. The problem with Aetna and United Healthcare is that they won't write a municipality. And the reason they will not write them is because you're a non-ERISA group. That is a little bit surprising in that Blue Cross will write a level funded plan, because there is a limit in liability to the carrier, or more liability to the carrier if it's a non-ERISA group, but so far they said they'll do it. Questions?
Sounds like our state representatives need to take a look in the insurance and give us a little more variety.
Well, there's not really that many out there. I mean, if you look at what happened, the consolidation of carriers with the ACA, the big carriers bought everybody else up. I mean, we used to have Preferred Health, and we had Coventry, and we had all these others, and the carriers just bought them out. We had American Medical Security, we had all those, they're all gone.
My concern is exactly what George stated. We know, well, I was going to say, we know where we're at with Blue Cross Blue Shield. No one ever knows where they're at with them, but we know what our plan is right now. If we go out and we go with KMET, and as you say, if KMET doesn't meet our expectations, or if for some reason KMET can't keep the number of cities to maintain their plan, are we assured that we can drop out and go back in at a no higher cost or risk with Blue Cross and Blue Shield than we have right now?
Okay, so so when you look at rates for under 50 life groups in the state of Kansas, the only time you would have a risk is if you got to employment base that you had more than 50 full or part-time equivalents. Okay, so as long as you're under a 50 life group, the rates, when you look at rates on the Blue Cross Blue Shield plans that are out there, everybody comes in at the same rate. There's no underwriting involved. I mean, if I go to look at a rate for any one of the 20-some Blue Cross plans that are available out there, I put in the renewal date, the date the employee's eligible, and his date of birth, and his zip code. And then that rate set doesn't matter where he works. So yes, as long as we're that size, under 50, you could go back to Blue Cross in a heartbeat. Where you would have issue is if you got outside that. I mean, if you became an employer of excess of 50. Now, the other side of it is that when you look at a situation in this KMET deal is that really Blue Cross really doesn't care whether you're in their association plan or if you're over here. Actually, in all actualities, they like you to be in the association because for the next 3 years, they know they're going to make more money off of you than they would have if you'd stayed out because the rates are higher.
So at what point do the rates become lower? That's,
Well, the estimate is at roughly 3 years, isn't it?
yeah,
Yeah,
Yeah.
but in the meantime,
There's no formal guarantee of that either.
Right, and it could be next year.
yeah, it could be next
Could be
year. I mean,
next
if we get a 40% increase,
Yeah.
then,
Another thought, let's say we go into this KMAT and they need so many municipalities in there to meet their critical mass, their need, get this off the ground. And let's say they're meeting our needs, but there's one or two, maybe three other municipalities that we gotta get out of here, we gotta go back to Blue Cross Blue Shield. Does that all of a sudden make this, organization defunct, and what does that do to the remaining members?
Well, I don't know the formulary that the guys that are putting this together have determined where their threshold is. I mean, that, I haven't talked to them about that. We know that they have this push to get to the certain size by tomorrow, the number of groups that are in it. In some of the groups, one of the groups that I talked to the rep for tonight, she is the Blue Cross rep for Rose Hill. And she said they're all in because it's a better deal, but they're an over 50 life group. And so I don't know. I mean, that's just one of those things you don't know.
and was able to talk to KMET and talk more, essentially in the association plans, generally talking where I said, we don't know if a modifier might be applied to us or that. Typically, they said in all the other associations they run, and there'll be obviously some oversight internally, there'll be a group formed from the member cities to oversee this to a certain extent. That most of the associations, like if you're a charter member, then they basically say you were here on the ground floor, you're getting, you get to come in at these rates, and they're kind of protect that group. And it's when the people come in afterwards, they can look at them and say, well, yeah, you want to join us and there's benefit, but you're also riskier. The core group that formed this, we're not going to take that, we're going to assign more risk to you because you're the newest guy on the block. And I mean, again, to put it, it's kind of, there's always unknowns. I mean, with health insurance, some of the things we do know is, medical inflation is, 1.5% a month minimum, if not more. I mean, that's constant. So that's not showing any signs of changing in the near future. So we know costs will continue to increase. I view this very much as, Halstead was one of the charter members of KMET when KMET formed for work comp. And it was very much the same thing of, there was so much unknown. There was the possibility of private insurers not being able to meet the city's needs or provide service that was needed, that they got together, with the city of Newton and other cities and said, without change, there is really no progress. And we know what has been happening historically, and we don't like it, but we have no way to change that. And I feel that's almost kind of the boat we're in with our health insurance of, while we do know Blue Cross and we can kind of, we also don't know, and there's still the possibility that we might say yes, and they really are at that critical mass point where, if enough cities, even in this group, say no, they'll call us and say, you know, no, you're not. All we do is tell Blue Cross, yes, we're gonna renew. And we have until December 31st to make that decision with Blue Cross Blue Shield. So our current renewal is on the table unless we actually sign up and are underwritten and become. But because it's fully insured under Blue Cross Blue Shield, that was one of the easier things for us to even get in that underwriting group is Blue Cross Blue Shield already has the data, and since they're most likely gonna be the only group that really looks at us to ensure if we would come out of the KMIT pool, they again have all our data there, and hopefully it's seamless, and that's, you know, it's one of those, this could potentially be, you know, one of those moments that was really game-changing, or that if things work the way they're supposed to, and again, most of the associations, and they are able to keep their health insurance costs at these 1 to 3% max, you know, over time. It's just, this is so new, and without knowing exactly who is in, I mean, they've arranged a rate cap for sure next year with Blue Cross Blue Shield, so the max that rates would go up is 10%. And that, I guess, they, you know, had to decide a little bit because they were still uncertain of what cities are in or not. But they've already arranged that with Blue Cross Blue Shield, where, you know, if we stay with Blue Cross Blue Shield, we might hit the lottery again and only have a 4% increase, or next year might be the 30%, and we could have only had a 10% increase. And it's really kind of, if this gets off the ground, I think Halstead's in a better position to fully realize the benefits of it, being on the ground floor, than trying to catch the school bus after it's already left. So,
Why such a major cost difference for 2022 as compared to 2023? I mean, is that startup cost, or you're looking at, say, let's call it 375 to 425?
yeah, some of it's just the startup, you know, getting it off the ground. Part of it is the rates actually came in higher even than their preliminary rates they sent, because they had a lot of cities that did look and said, well, this doesn't benefit us even in the first year. We don't care, you know, 4 years down the road is 4 years down the road. And so they had several cities that would have larger and made the group, the association, cover more lives, which is better for the association. They pulled out, and so they actually lost, and that actually drove our final rates up, because certain cities that had tentatively committed decided to pull out, and subsequently pulled a lot of covered employees out of that potential pool.
So we had 1 year where we had a major happening, an injury that drove us, that's probably that 40% price increase that we saw through Blue Cross Blue Shield. When we start, if we go with KMET, I don't know how many employees total that they're looking at.
They're looking at a pool of 500.
They were trying to get at least 500.
So if 1 out of that 500 or 5 out of that 500, they have a cancer case or something major medical, is that, I'm gonna call it a penalty for having insurance, or it's just a penalty? Is that spread out over the 500?
It'd be over the 500.
Yep.
The thing that you look at when you look at under 50s, when you look at groups under 50, and you look at the average increase this year, the rate renewal, average probably is somewhere around 6. We were at 4. But I'll give you an example of a group of 16 lives. It happened to be a group that my sister was insured in, and it was owned by her husband, and he's a veterinarian. And her claims from December the 17th through July the 17th, when she died, were $400,000. Their renewal was 2.8%. So, I mean, they were less than a 3% renewal, but it was because of the age of the employees in the group. Most of the people that work there are all under 30.
Let me ask you a direct question. You represent us, you advise us. What's your recommendation? Do you think it would be smart to go with the KMET group or stay independent?
I can see it both ways. I mean, if Cayman can do what they say they can do, then there's some stability in there. I'm not real happy with the plan that they've offered, but,
In what way?
well, it depends on which way we go. I think we're leaning toward that comprehensive plan. And the only thing that, right now, we're a $4,500 deductible, we're a $4,500 max out, $1,500 deductible. And then we have an HRA that comes in and picks up all the co-insurance. So our employees, other than deductible and co-pays, have a risk of $1,500 currently. So if we go with a comprehensive plan, we have a $1,500 deductible, but we have a co-insurance limit of $1,000. So if we left the HRA to where it would just cover co-insurance, the city's risk on the HRA would go down from what would have been $3,000, it'll go down to $1,000. But our employees still have a max risk out of pocket of $5,000. And that's coming from, after you get past deductible and co-insurance, it's coming from, they've got a pool in there of $2,500 that will apply to only co-pays. So while you have a $25 office copay and your prescription costs are less per tier, if you get into specialty meds, you could have somebody out of pocket $2,500 in just prescription copays. So I don't know. If I was building this group, I would have not picked that plan to have that $2,500 laying out there. That's just my opinion.
Well, your opinion is valuable to us.
So this one here is what we currently have.
Yeah,
Right.
Okay, so where is on this one, where's the dental, where's the vision?
dental and vision would not, yeah, are separate. And we're not anticipating.
So
Camet's only offering, well, they're offering health and dental, but us staying independent on our dental is most likely the best move for us
Okay, so
because it's
that's-
cheaper.
So is that what we do now with, or is it
Yeah,
bundled in?
we technically have a separate health and a separate dental policy, both with Blue Cross Blue Shield. And then the only dental the health covers is the pediatric per ACA. But we have a standalone dental policy with Blue Cross Blue Shield right now.
Okay, so they would still, the employees would still be able to get the dental and the vision?
Yeah, we would not change
Okay,
those
okay.
offerings.
And they have, with this one, they have the option to opt out if they want to, correct? Of the
Yeah.
dental and the vision?
Yeah, we don't require employees to take all or none. We let them.
Okay, okay.
So we have one employee, for instance, that only takes vision and
Right.
doesn't take health or dental, so.
Ethan, how long has that relationship been with KMET regarding our work comp insurance?
1994 is when KMET formed, so. And I guess to Mike's point, knowing that, again, was just a small group, haven't had employee-wide meetings or anything to talk to all insured, but, talking with that small group, of the two plan designs, even though there was some increased risk, they preferred the comprehensive plan design, because of the benefit on the prescription and the co-pays all being 25 across the board, not a difference between specialty and regular GP visits. The next two, or the last two sheets in there, kind of show you the KMET plan and the KMET Blue Edge plan. And that's where you can actually see the vision. And on the KMET plans, I did note, and the division's kind of right. I should have put the divider in there between the current. When I put this in, I just assumed that we would take the KMET dental plan. We don't have to. So some of those costs would already come down if we stayed on our own dental plan because our rates are cheaper than what KMET is. And the coverage is a little more beneficial on that. But that, again, the health insurance is the large driver. Dental and vision are much cheaper per employee. But you can see when we went to age-banded rates, and the council at that time said, we're not going to aggregate rates. We're going to keep this specific. So every individual in the city of Halstead that's covered pays 10% of whatever their actual cost is. And so no two people with a family plan have the same payroll deduction. No two people with a single plan have the same payroll deduction unless they're the same age and have the same number of dependents. So you can see what this means basically on the far right side of that sheet is we have 9 employees that actually would come out ahead if we switch to the KMIT plan. So where their total deduction per payroll would actually decrease from what they currently pay. We have 15 employees who would actually see an increase in deduction, and knowing that if we went with, the KMIT plan, that we would be assigning additional cost potentially to employees depending on their health year. I would absolutely advocate if we're gonna switch to make, those 15 employees whole by giving them a one-time wage adjustment so they're not seeing less take-home pay. Otherwise, and you can see the total cost there between the two plans, and again, this isn't perfect. I used a simple 2,080 hours calculation. We know our PD and fire EMS work more hours than that, but you're looking at somewhere those payroll costs for the entire year would run the city basically another, let's say $8,000 to $9,000 to do those wage adjustments. And you can see, the most somebody would need is 46 cents. And it goes down to 12. But that would ensure that the employee was not being penalized by the switch as far as what they've come to expect in take-home pay compared to what they've done.
Well, the way I kind of look at it, we had the potential in 3 years of saving a substantial amount of money. But the first year, it's going to cost us a substantial amount of money. As long as we can back up, if we're not happy, if the employees aren't happy with it, we can back up and go back to our original plan. So I guess, is it worth the risk to spend a little more starting out to save more in future years? And we have to look at things 10 years, 15 years down the road.
Well, and if you kind of look at our track record with our work comp insurance, it has been beneficial. So, and change don't happen unless you change something.
Yeah. I was gonna say, if we've had an association with KMIT since 1994, they're not new to us, we're not new to them.
And
I'm in favor of
Yeah,
giving it a shot.
I say, and that's, again, full disclosure of, we might still say yes this evening and find out by the end of next week
Right.
that this is not going anywhere. And we assume, hey, if we get in this year and next year they say, well, hey, it's a 10% increase, that might be a reason of concern of in the first year, why are we seeing that? Again, the advantage I see is if this does get off the ground, we'll be on the ground floor. We'll have a voice in how this is actually organized by having a seat at the table, by being a member. And then again, hopefully it works. They anticipate there are several cities because of grandfather status or just the way they arrange their plans that have March 1st renewals, July 1st renewals. They can't join yet, but they have indicated they want to join as soon as they can. So those of us that had December and January 1, hopefully can get the ball rolling. So there's potential the association will actually start to grow throughout the year as those come in. The goal actually eventually is all the association, will be on a 1-1 renewal. So they'll basically write, short-term plans for those cities to come in to the association, but.
The only thing you need from us tonight is a consensus to our commitment to go forward, correct?
Mm-hmm.
It's, we always have to look at playing the long game
Yep.
on so much of what we do. And be nice to have a crystal ball.
it would be.
Yeah.
And you guys know when we're budgeting, this employee health insurance is probably the highest
Right.
thing that we have to budget for. And if we can kind of get it to where like I said, we can get a crystal ball on it where we can kind of predict where we're gonna be, and it's not a guessing game. I think it's a huge advantage to the city. Again, we gotta think about the long game.
Well, and here, when you have to budget $500,000 to cover yourself on a realistic $350,000, that's crazy budgeting.
Right, right.
I think it's a definite benefit for Ethan, for all of us, to have a better direction of where we're going. And if we're surprised, let's back up and we'll punt the ball.
I say, we know unless the powers that be swoop in and try and change the system on the macro level again, presumably in another year, we will still have metallic ACA compliant plans that would be on the table for us to consider if the KMIT option is not performing the way we want. You know, there's a presidential election in 2024, and by then, who knows
Yeah.
what the health insurance marketplace or options will even be available. So
Guess we have a consensus.
I'd say so.
is there any strong opposition about doing the adjustment on employee wages to make no employee
No.
worse off? Okay. I felt that was, even though that adds a little bit of additional cost overall to the city, I feel that's the most fair thing to do with employees.
I was gonna suggest it anyway.
So, excellent. I will let them know.
Thank you, Ethan.
right,
Thank
thank
you, Mr. Wise.
Yes, thank you.
Well, if that finishes up this subject, it was the only thing on our agenda this evening, so I would entertain a motion for adjournment.
So move.
Second.
Have a motion and a second for adjournment. All in favor, say aye.
Aye.
Those same sign, we are adjourned. Thank you, Council.